Hello. All right. Next, I have on stage with me Andrew and Hugo, and we will be chatting about cross-chain NFT, the infrastructure behind it, okay? Guys, give them a big hand. Both of these guys have been in the space from at least 2012. They have a lot of info. I'll try to get as much out as from them as possible. See, I'm a big beneficiary just by attending these conferences. I was there from the first NFT conference in New York. As I said earlier, there were 100 people over there. It went to 16,000 people last year, means this year. So I've seen the transformation here and in the crypto space, where we were just meeting in small rooms for 20 people, and now it's like 20,000 people. Everybody is interested. I didn't build anything. I was very passionate about the subject. I just invested. I was very lucky. But these guys have really built stuff. They've done mining. So I will leave it to them to introduce themselves to you. By the way, I'm Nithin Eapen, and I'm from New York.
Sure, thanks for that, Nathan. Nithin, so my name's Hugo. I'm the CEO and co-founder of a company here in the UK called Perpetual Altruism. We've got 3 products in the space. Started a project in 2017, 2018 called Cryptograph, which is perpetual philanthropic sort of NFTs. Invented an auction system called GBM, which has been spoken about here on a couple of other stages, which is the concept of incentivized auctions. So you create the incentive to bid. And we're launching a new multi-chain marketplace next week, actually, in beta. We've got a vending machine outside, which is pretty fun. You can go try that. I started in the crypto space, I think, in about 2012, 2013. Bitcoin is where I started. Like most people, went down the rabbit hole. Ethereum appeared. I became extremely excited. And then after that, the sort of last aha moment I had in the space was Polkadot. And the reason for that was interoperability. And we're going to talk a lot about that today, I think. But yeah, that's a bit about me and what I'm up to.
Hey everybody, I'm Andrew. I'm the Senior Director of Blockchain Engineering at Blockdaemon. We're an infrastructure company, been around since 2017. At the time it was very difficult to run Ethereum nodes and Bitcoin nodes in production for the ICO boom. We saw that as an opportunity to, build a platform where anyone could run their own Ethereum node and get access to the blockchain. In late 2018, we saw that there was a proof of stake kind of narrative happening where people would need to run their own infrastructure and mining was going to be replaced by software systems. So we very quickly kind of looked at all of the roadmaps for the blockchains out there, and we kind of built out a platform where anyone could launch a proof of stake infrastructure. So currently we deploy thousands of nodes all over the world on 60 different blockchains, and that's kind of the core of our business. But over the years we realized that these platforms were going to need to be built on as well. So, we started developing APIs that could, standardize, a universal API that would sit across a lot of the blockchains. So we could easily give an integration to someone with one integration and they could get access to all of the underlying chains. Likewise for NFTs, we're taking that same approach. So currently we're deploying a load of, indexing on Ethereum, and we're moving that across other chains as well. Prior to Blockdaemon, I worked in the travel industry, building back-end systems that were very API-driven, where we standardized all the different travel industry systems out there. So it's very similar kind of approach that we're taking in the blockchain industry now. So leveraging that kind of like schema-driven experience to bring it to all of these different blockchain ecosystems is quite useful. Before that also, 2013, 2012, Bitcoin as well, also down the rabbit hole. Went a little bit on a detour down the Dogecoin rabbit hole for a while, which was quite entertaining. Mined a lot of them on laptops and whatnot. My partner thought I was crazy. But yeah, after that then also Ethereum came along, lots of GPU mining at the time as well, and also had a VR company at the same time, so it was very useful. When we weren't mining, we were putting kids in early metaverses, so that was kind of fun. And then yeah, 2018, just decided, I have to get a job in this space, quit the travel industry, quit the innovation team I was on, and went full Blockdaemon. So yeah, that's kind of what I've been up to since. Yeah.
They've done very well. Blockdaemon is valued at around $3 billion during the last round.
Yeah, during the last round, we aggressively raised, yeah.
So, we will do a little different. The last 5 minutes, we will open up for questions for you guys. It won't be like the other ones where we're just chatting over here. But before we get in, we just want you to understand, why is this important? Cross-chain NFT swaps or cross-chain swaps or bridges or interoperability. So just to think for people who are not thinking about this, imagine you're in the US, you have dollar, and you're trying to come to UK. Imagine there were no credit card companies and no banks or no ATMs, and you want to use your dollar and go to the restaurant, and they only take pound. There's no way they could extract that value. So that's where a credit card company, banks came to help. Same way right now. Blockchains are realistically islands of value. Bitcoin blockchain, it has what? 450 billion. Ethereum has 200 billion. But what if you only have Bitcoin and you want to do something like a lending on Ethereum and you cannot move your Bitcoin over there? Imagine that you have to go to Coinbase, sell your Bitcoin for $1, then use that dollar to buy Ethereum, and then bring it back to the dApp. So this is where a bridge or cross-chain swaps make it easy for you so that you don't have to go through this process. And the same thing for NFTs. And once you have this, you can move your NFTs across blockchains. What are the challenges for that? Hugo, I'll take you. Why don't you think? Why don't you say about it?
I mean, there's a lot of challenges. It's a super, super important piece of infrastructure that needs to be worked on and built, because the future of this space, an NFT is a lot more complicated than a fungible asset, because it's basically a blank deed. It's a canvas in which you can write lots of different kinds of value. And because they can be unique and they can be very different, and you can have lots of different kinds of rights in different NFTs, they're not as easy to transmit between worlds. When I say worlds, I mean blockchain networks, as, say, a fungible asset. So there's a lot of thinking and building that still needs to be done here. But it's going to be very important because, I'll do like one sort of resolution scenario that people understand but dislike because of also the complexity involved. But you've got an in-game asset in one game. That game's built on their own private chain, or they're on one of the existing main nets, and you want to use that asset in a totally different game, in a totally different world, but you need to be able to move it between those networks. And so, you've got your, let's say, Counter-Strike skin, and you want to move that skin to a Call of Duty weapon, let's say. Moving it between those worlds, first you need to move it on the network level, which is why you need bridging and cross-chain infrastructure. And then you also will need to have both of the companies on top of that agree on the same IP rights, and that they look after each other's assets in each other's worlds and that kind of thing. So that was a little bit more complicated. But the whole purpose of this space is that people are going to be able to move and transmit value between wherever they want to go, wherever they want to move their assets. And that's why cross-chain is going to be super important, or interoperability between chains. I would say the first challenge we looked at and we're still iterating on was this inherent difference between a fungible and a non-fungible asset. So if you want to trade a fungible asset somewhere else, it's pretty easy. We already do it. It's basically called wrapping. You've got an asset on one chain, and you issue like a deed or a token on another chain, and you can trade it on that chain and then redeem the underlying asset on the existing chain. And it's pretty easy to do, and we can do it with fungible assets. With a non-fungible asset, because there are rights involved, and it's in many ways more Web 2, right? Like publishing rights, legal rights, commercial rights, whatever it might be. You need to really be able to track the provenance of this thing between blockchain worlds. And so we set about building a migration standard for these kinds of assets that have utility and functionality within them as well, so that you can move these things between blockchain networks in a way that has the permission of the original publisher or creator as well, so that you can track the provenance and you can easily tell, whether this crypto kitty in this smart contract universe on this blockchain is a fake or a forgery, and this one is the one that's sitting in the contract that's been blessed by the original publisher, let's say. So it's actually interesting because this whole space started on this idea of permissionlessness, which I love and is vital. But if you want to bring existing asset thinking and value and ownership systems that have been built over millennia, you need to be able to also cater to that as well, which means that permissions, whether you like it or not, do need to exist in some form. But the point is that also users will have the choice to be able to implement what they want, which is why building up that tooling is super important. But I've digressed a lot. Andrew, what are your views?
Andrew, from an infrastructure side, you guys are looking at the infrastructure for these things, like from investments to, because you are supposed to support this, right? Everybody's going to come to you, right?
Yeah, exactly. So, I mean, when we talk about NFTs, we're really talking like higher up the stack, right? But everything really runs on the blockchain itself, on nodes, on infrastructure, and that's where, our specialization comes in. So as I said earlier, we run, lots of nodes all over different networks for different use cases. Some networks are quicker fees, some have higher security, some are staking, some are not. And, one of the things that we kind of have been kind of leaning into over the last year is, there's going to be a world of multiple blockchains. There's going to be interoperability. We're seeing standards in Cosmos with IBC. We're seeing Polkadot as well. We're seeing, bridges. We're seeing all sorts of different kind of evolutions. But what we're seeing as a business is that there's, people need to run those bridges, right? They need to run the transfer of assets across chains, and there needs to be incentives there as well. So, infrastructure providers like us are very much looking at, who are the emerging projects. Some people have mentioned Layer 0 today. There's other projects like Abacus. There's, IBC, like I mentioned in Cosmos. And we're really starting to see that cross-chain messaging is, at the base layer, right? It's really at that kind of infrastructure layer of passing, cryptographic proofs across chain, which bubble up to, NFTs that could be in a metaverse or they could be in multiple metaverses. And if we think about all layers of the stack, interoperability isn't just at the base infrastructure layer. It kind of moves up, and you need infrastructure providers, you need developers, you need at the very high level, the applications that are using these all to embrace that. And I think at some point, maybe a few years in the future, it will be nearly transparent to the end user what is actually happening at the base layer. And there'll be people like us who are running that and making sure that it all works. And there'll be developers in the middle who are using libraries and as I mentioned earlier, like APIs that kind of abstract the differences. And you'll have developers and engineers just kind of arbitrage, fees. They might use certain assets on one chain, but the actual primary NFT might be on Ethereum for security purposes. And you'll start to see all these things, and it will mostly be transparent to the users. But at all layers of the stack, there'll be someone managing that interoperability, that cross-chain. So yeah.
I guess as a user, when we use Google, when I do a search, I really don't have to know TCP/IP, right? Somebody takes care of that, but there is something happening behind. Now, I'll give you an interesting statistic right now because, you see, there was cryptocurrency that had a big first ride in 2012, 2013. The next big one came in 2017. At that time, the NFTs just came into play. The real big run happened in 2021. So in 2021, there were some things that happened, DeFi, and bridges just came in. I personally think these bridges and swaps are going to be a very big play by 24, 25, okay? Reason is, it's just, I try to go with like all the big VCs. They are investing 135 million was invested into Layer 0. Another 25 million went into Wormhole. All these guys are pulling money. And what I look for personally is, okay, if they are saying it that way, I might try to get a piece of the next protocols that are doing bridges. So I pick bridges which already have tokens because I'm not an equity investor. I'm a hardcore crypto maximalist. So I picked Router Protocol, one of those, because they are a bridge, okay? What I'm trying to do is the next run, I'm trying to get it. And what is going to happen to that space? What are your thoughts among the companies out there and these money that they're raising? Huge amounts of money are going into bridges.
Yeah, I mean, I think huge amounts of money are going into bridges because people know that a multi-chain future is extremely likely and therefore it's key infrastructure. I would say we're in the first iteration of bridges, and we are definitely feeling the security concerns related to that. I mean, they are natural honeypots because they collect vast amounts of value because people want to move their assets, and there are a lot of security concerns with them, and we've got plenty, Nomad, Ronin, I mean, the list goes on. So there's a lot of learning there that needs to be done. Then there's also questions around, there'll be different standards and different ways of implementing bridges. I mean, for the NFT migration protocol that we came up with, we had this concept of separating what we call a bridge and a relay. And a relay is the thing that writes in the bridge, and the bridge is the thing that stores it. And you can implement any kind of relay in a decentralized or centralized fashion, and it's up to the user to have the choice to decide on, I guess, which relay has the most to lose. The bridging itself is still, is still potentially a weakness. One thing in the future that will get quite interesting will be we're looking at the idea of turning our, because we build an L1 for our system to create the best user experience possible, which we might turn into what we call a parathread on Polkadot the day that that technology goes live, and that parathread could start validating all of the other chains that we operate with, and that could create what we would call a trustless, at least one-way bridge, which would be very interesting. But the two-way for that is yet to come out. So trustless bridges, I think, is the next step, but it's going to be, it's tough.
Just for you guys to know, since he said about trustless bridge, like BitGo is doing the bridge for WBTC. Like you're moving your BTC to Ethereum, but it's a trusted entity in between. They're holding it. So there's always a risk that the guy at BitGo, they can go bust, and that's why you want trustless bridges, because we have a trustless product, Bitcoin, and now we're making it a trusted product just because we want to move it on Ethereum. But that's the first step. It's a one-way bridge. It's a unidirectional bridge, and there's a trusted custodian. So we want to remove the trusted custodian. We want to make it two-way bridges. On the security side, Andrew, what are the big things that you see on the security side with the problems associated with security?
Well, I guess one of the the obvious ones is, as we alluded to, a honeypot, right? So if you see billions of dollars or even millions of dollars of assets sitting there, and all the code is open source, and someone clever is looking at the pull requests and the feature requests going in, all of a sudden they might be able to front run you and exploit the obvious bug or flaw that was in your system. There's a lot of say even DeFi, for instance, if there's a flaw in one, it might have been copy pasted to 10 other platforms. So all of a sudden you've got these smart kids running around absolutely raiding your platform just because they're following your your GitHub account, and they've starred the repo, and they've said, all right, next time there's a fix, I'm gonna chase it. And you see the exact same thing with bridges, and there's some clever people out there who do this for a living, basically, which is kind of entertaining to see. It is still a bit Wild West, but from an infrastructure provider sense, like, we also don't want to be kind of caught up in that. So it's very important that when we look at an interoperability protocol that we may want to get involved in, that we very much have a strong relationship with that team. We potentially might even invest in them depending on the protocol itself, because we have a lot of institutional clients, and the last thing they want is they've put funds, or they use us for some interoperability layer that we're offering, and all of a sudden there's some bug, and we're kind of caught on the hook there. But the other interesting thing that I think is another emerging narrative, again, I'll refer to Layer 0. They did a NFT mint earlier on in the year where they deployed contracts on 7 different chains, and they used their platform to basically allow you to mint the whole collection across all these different chains. And some people did it on Ethereum, some people did it on Avalanche, and so on and so forth. The interesting thing there is like, if there is a security vulnerability in that sort of approach, like, where does it fit? Is it trapped on one chain? Do you just cut them off and say, sorry, people on Avalanche, you're done? Or do you, what does that look like? And I think we're going to see that type of platform launch. All the DEXs are on multiple chains, but they're only really starting to now figure out how to message across the different LP pools and whatnot. And I think that's going to be an interesting narrative to watch as it unfolds, and also for the security implications of it.
Just to give you an idea of the numbers, there was $2.1 billion hacked this year. All right, this is 2022. 1.8 billion went from the bridges. So the biggest was the Ronin hack. And now some of these are Web 2 hacks. Some of these are not smart contract hacks. I'll give you an example. The Ronin hack was because somebody over there was given a job offer. They did an interview with him, and they said, they're giving him, 5 times his salary. He decided to take that offer. They sent him a PDF, but this guy held the keys over there. He was clicking through the PDF, but basically what happened was, that was the Trojan. They took all the keys, and the hack happened. So that's a Web 2 hack. It's not really a smart contract hack, but so you have to be aware of Web 2 and Web 3 problems. Now, one of the key things is, now, if you have an NFT project, so you have an Ethereum, you're releasing your NFT on Ethereum. Let's say there's a Solana guy who's willing to buy it at that time, but he only has Solana. You need to take care of those kind of things also, because maybe your audience is somewhere else willing to give you. So you need some kind of library that can convert their Solana to Ethereum so that they can buy this, lock it somewhere, and even move it to a chain. Or you have to start thinking of those things, because these islands are fragmented, or this value is fragmented. You want to bring it together. You want to move assets across this bridge, because that's only when it becomes valuable, where you can extract value. what do you see from a minting perspective or locking and minting perspective?
Yeah, I think minting. I mean, Andrew alluded to Layer 0 doing a multi-chain mint. I think that's going to be crucial. I mean, our technology stack is we built our own blockchain, sidechain, whatever you want to call it, essentially an L1. It's built in something called Substrate Frontier, so it's basically a mixture of Ethereum, CVM, but also Polkadot's modular building framework of Substrate, and that allows us to interact essentially with any chain that we integrate. At the moment, it's obviously working for EVMs, but we can put in Sol, Flow, Tezos, Bitcoin, all of them can apply to it. And the interface, which is going to be MyNFT.com, is going to allow you to, when we release the minting product, which won't be for a few more months, but you'll be able to pick which network you want to mint on. You'll have the UI and the infrastructure to be able to do that, because our sidechain can send the messages to all of the necessary other chains. But when it comes, so that's a sort of example of, I think, how minting is going to evolve. You know, you're going to be able to have an interface where you pick where you want to go. And I think the point you mentioned about value is, I mean, this is also why Cosmos and Polkadot and things like that are very interesting, just from a long-term perspective, if you're thinking about value, because if you're building the roads that are connecting all the cities, where the roads are all going to naturally aggregate somewhere because of, you know, Pareto's law, 80-20, capital will naturally aggregate, it's a natural law. Like, if you're building the glue, which Polkadot and Cosmos are trying to do, you know, it's a really interesting place to be, is our view, because, yeah. I mean,
Guys, if you have any questions, please do raise your hands. I'll try to bring the mic over, okay? If there isn't, I'll keep asking. Definitely a chance. Okay, there's one.
Sir, you spoke about interoperability protocols which have tokens and you're a crypto maximalist. So would you like to elaborate on some of the interoperability architectures that are available, and which one do you think is the most elegant and a recommended way of providing interoperability to this fantastic NFT space?
Okay, so there are 83 projects out there. I'm very interested in this space because I think this is going to be the next one. So I've literally looked up 83 of them. And obviously, I focus more on the crypto ones because that's easy for me to purchase. See, the equity space, what happens is the big VC funds get the entry into it. Like, you have to be a Sequoia or Andreessen to get a good round if it's a great project. Like an Axelar, they raise from the big guys. What is a chance for a small-time investor? So I go for the smaller ones. I think a smaller one will be victorious. So I looked into Rubik, Router. These are examples of stuff that I looked into. Now, the best solution, if possible, is you have your own blockchain that is going to do this, all right? That's not going to be easy. Architecturally, that will be the best solution. Right now, everybody is using it as a bridge. They're doing the locking, minting on the other side. Lot of the surface vector or the surface area for attacks are huge at that point. That's what I feel.
Yeah, I mean, go for it, Andrew, on what you think.
Yeah. So one of the things I kind of we mentioned Cosmos, we mentioned Polkadot. I think this is another narrative, is that a lot of the blockchain SDKs have this kind of interoperability natively baked in. So if you launch a new application-specific chain, that might inherit some shared security from a validator set, you natively get this interoperability built in, and you're starting to see a lot of people kind of embrace that at the moment. And then, when Polkadot and Cosmos eventually bridge, maybe it'll be with IBC, maybe it won't, you'll start to see these as we mentioned, TCP/IP, right? If you look at the OSI stack, you've got all the different layers that communicate with each other. You're going to start to see that with bridging protocols as well. So not necessarily a particular team or particular project, but you might see like the primitives of a particular blockchain or a development kit be utilized, massively across the industry. Like Binance Smart Chain uses the Cosmos SDK, right? Same for a number of other like top protocols. Likewise, Polkadot, a lot of blockchains are using the Polkadot kind of substrate platform. And you just get interoperability for free. And then people are going to build specific chains on top of that to do particular use cases. So,
One last question. There's time for just one last question. If anybody has a question? No? All right. Otherwise, guys, give a big round of applause for Hugo and Andrew for being here. And
thank you.
You can meet them outside and ask questions.
Sure. Thanks, Nithin.
Thank you, guys.